Well, here we are, folks. 2024 is done with. We're into 2025. So I thought I'd make a video here talking about how I made over $1 million in 2024. And the thing is, like, that growth, it really started to accelerate these last few months, because that's where I started to introduce the candle confirmation. For most of the year, I was trading like just classic market structure shifts, and that was about it. Throughout most of the year, that was the case. So you got to think, like, if I was trading candle confirmation all year, how much I would be up right now. See what I mean? Like, because that's something new that I just wrote out here recently, and we've been trading for like the last few months here. So I've been doing market structure shifts, and then, you know, the candle confirmation, but candle confirmations, what's really been accelerating it lately. So I think what I want to do with this video is I want to talk about a little bit about both. And with the candle confirmation, which I've talked about candle confirmation, I want to give you a reminder, and I want to make very clear how you can target the highest quality deals, the best deals with candle confirmation. As I've recommended, if you're a beginner and you're just brand new to the concept, then that's going to be your best bet. Okay. I'm not saying you got to try to be like me, right? Because I do a bunch of different deals with candle confirmation. Some are higher quality than others. But if you're just starting off and you want to narrow that focus and just focus on the best of the best, very useful, just also because, like, you're not going to overwhelm yourself, because there's a lot of setups that you'll get with this. And by focusing on those, it's a little bit easier for you, or not a little bit, it's a lot easier for you to handle whenever you just have a few selective deals, right? So that's going to be the approach that you would want to take here. And it also makes it easier to handle like drawdowns, losing streaks whenever that happens, because it's inevitable. It happens with any strategy. Doesn't matter how good it is. You're going to have those losing streaks. You're going to have that drawdown. Just times where it doesn't stick, which has actually been the case. I mean, this last week and maybe like week and a half or so. But that's part of that. I'd say a big reason for that is because of the holidays, you know, around Christmas, New Year's. So it's kind of expected. But by doing this, by waiting for the highest quality deals, you're going to make it a lot easier on yourself psychologically to handle this stuff. You see, you can graduate to it a little bit later and do it like I do. But starting off, that would be your best bet. All right. You got to take baby steps, one step at a time. Before we get into the video too deeply, I want to give you a reminder. If you're not in my free Discord, you need to get in my free Discord. Okay. 100% free. Doesn't cost you a dime to join this chat. And if you are interested in learning more about candle confirmation, then this is where you need to be, because I plug my charts beforehand, no hindsight, and you can learn in a real-time environment. I can't stress enough how important that is, and seeing this stuff real-time, you know, unfold real-time. Before you see the charts before it happens, after it happens, and you can kind of connect those dots better like that. Because some folks, they think that they're just going to watch one video of mine, or watch it, because I have these soldiers like, oh my gosh, Mike, I've watched your videos, but I still don't understand it. Like, well, maybe because that's all you're doing is watching videos. I've said it. You don't learn by simply watching. Watching gives you the framework. You got to be in this chat. You got to be following along. You got to be in here connecting. You got to be going into your own charts and looking into your own charts. You got to be back test. You got to be actually putting in that work. And that's what a lot of you that write those comments to me are not doing. You're not putting in that work. All right. That's how it's going to connect. And that's how you're really going to begin to understand this and start to see it. You're not going to get it just by watching a video. I'm giving you the videos to give you like the rules to abide by, etc. And then you can go in and do the real work. So get in here, 100% free. Link in the video description. All right. All right. So as I said, we're going to go over a few different deals here. I'm going to show you how to get like the higher quality deals. So here's the number one thing that you need to remember when we're talking about candle confirmation and getting higher quality deals is you got to have the trend back in you. That's the biggest thing that's going to really up your win rate. It's going to get you better follow through is just by having the trend back in you, folks, and not counter trend trading. So a very simple way to do that is we're going to go over this 4-hour deal in AUD that I have marked right there. But you see all the daily charts in a downswing. You see how it's been curling lower here. And when I say downswing, that means like you had a swing point put in. Like, for example, you have highs in the middle, lower high on the left, lower high on the right, and you see how it's just tagging the lows right here, and it's consistently moving lower. Day after day, its objective has been to tag out the low, tag out the low, tag out the low, look right here, tag out the low, and then it's coming down here. That's what I mean when I say like the daily tide is bearish. All right, it's in its bearish structure. Bearish structure meaning it's consistently putting in lower high, lower high, lower high, lower high. Follow my cursor. Lower high, lower high, lower high, lower high, and it's consistently making new lows. Look, new low, new low, new low, new low. It's consistently making new lows, and we have it in this downswing. That is a bearish tide. That is bearish structure. You're flowing with the tide if you're looking for a bearish opportunity within that. Okay. And another thing, the 4-hour bearish structure too. That's another thing. Same thing. Lower high, lower high, lower high, lower high. Make a new low, make a new low, make a new low, it's consistently making new lows. Look, it's tagging out the low, tagging out the low, tagging out the low. It's weak, it's bearish. You're flowing with it. It's a bearish tide. And being with that tide is such a simple, super simple, quick way to up your win rate right away, just by doing that. So with candle confirmation, remember what's step number 1 for that? What's step number 1 for candle confirmation? Step number 1 is you need conviction, right? Look right there. So there's our conviction. Remember, that candle where my cursor's pointing, it closes beneath that candle where my cursor's now pointing. Beneath that candle low where I have that horizontal blue line marked, this candle closes beneath that with aggression, with strength. Okay? What happens next is this candle opens at 5. And you don't get a setup into 5 o'clock. You actually got to set up into this candle. Now, it still has that conviction, folks. I want to remind you of that. I don't care that there's a swing point put in because it comes up here. Like the pivot point clearly has been tested by a long shot. Like it completely pressed up because it wanted to seek its inefficiency. But this thing presses up here and then we drop into this inefficiency right here. Now, to eliminate any confusion though, because I know there's somebody's going to look at this and be like, oh, but hold up, you're cherry picking because, you know, if you go to 5 o'clock though, then what about 5 o'clock? Because then they give it right here. Technically, no, you don't got 10 pip rule right there. I need at least 10 pips for a profit target. And then that translates over to the stop as well. Because yeah, like you got to push up after 5, right? Starts to break down, but you don't have 10 pips on that thing. Or like the target. So then you have to wait for a pullback and then it's taking out the highs. So you have to wait for a new displacement. And by that time, you know, it's about to come to 6 o'clock here. So what happens is it comes up and it seeks that inefficiency up above because it isn't a discount. And it has this inefficiency up here serving as a magnet for price. So price, it comes up and we test that inefficiency right there where my cursor's pointing and it rebalances it. That shouldn't concern you. There's nothing bullish about that. Okay. Meaning, like when I say nothing bullish about it, it's not interested in having like a change in trend or anything. Like when I see something like that, all I see is price creating more fuel for that leg lower. Now, if it had like a strong close above that previous high right there, that's where I would adapt and say, okay, I'm not interested for a bearish scenario, but it didn't have that. Look at how that did not displace above that high right there. That candle, look at my cursor, follow my cursor. That candle right there did not close above that. It's respecting it. It's got the inefficiency. And here's the key thing. Look right there. I'm going to look, follow, boom. That's intact still. At the time that it's doing this and it's coming up into this, that has not been taken. It's still there. It's still valid. And then I got this inefficiency up here that it's taken care of now. Look. So yeah, we put in that swing point, third candle draws right there. But once we take out that third candle draw, that's just more fuel for that move lower. And then you could look for a reaction off that, the fuel that push lower. Look, because there's no conviction there. That candle has no conviction above that. It's respecting not only the previous high, but the inefficiency too. And it opens up at 9. And at 9, it presses out that liquidity above that high. And that liquidity is going to frame that shift to take care of that low. You got the tide back in on the daily. You got the tide back in you on the 4-hour. You got your strong close. Okay? Now here's the thing. Go to your 5-minute. Of course, you only got the 5-minute push up. This entire leg up, follow my cursor, this entire leg up is what you are anticipating is the fake run, the manipulation. That's what you're anticipating it is, because you still have that intact down there. You still have that strong close intact down there. All it's doing when it's pressing up like this, folks, is it's reaching for that inefficiency. All right. It's reaching for that inefficiency right there. And what happens is, look right here into 9. Like it has that push, it pushes out the third candle draw right there where my cursor's pointing. See that? That's a turtle soup. So we get a turtle soup into those highs. And then that is where it pulls the rug. That is where you get your displacement. Again, plugged all this in the free Discord chat, by the way. As I do with all my deals, I plug it in the free Discord. This was plugged in the free Discord whenever this was happening. Okay. Fair value gap, strong close. Look right here. Follow my cursor. See that right there? That's a fair value gap. After run out the third candle draw, and you have the strong close beneath a short-term low in there, that confirms that. You can now conclude that, okay, it wants to draw to that right there where my cursor's pointing. That's the low of that 4-hour candle that we were talking about earlier that it never took care of. It's still there. So then once that happens, you can then look for a short. Now you got 10 pips now at this point. So this is better than something down here where you don't have that 10 pips. This has 10 pips. You could target that low, 1-to-1 stop. When I say 1-to-1 stop, yes, you're giving it a lot of wiggle room. I get it. And this specific setup, you have beautiful fall through, like you didn't need it, but there's going to be a lot of cases where it does need it. So like if you got in like right there, let's say, this is going to be your target, of course. And then you're going to have a 1-to-1 stop on it. And for the newer folks in here that are, I always have to give this reminder because I said before, I got to undo that brainwashing, right? Some folks are like, 1-to-1, why the heck are you talking about 1-to-1, right? I thought you can't make money with 1-to-1, right? My little furu told me that you can't make money with a 1-to-1, that you got to have bigger winners. Well, your furu is full of crap, okay? As with most people in this industry. Okay. Yeah, I get that that's a lot, but here's the thing. You need to rewire yourself and you need to get your focus away from being perfect. And you need to get your focus on just understanding where is price drawing to. Because what I like about what's good about this is it allows for imperfection. This was super clean. It took care of it. And here's the thing, like, and I've noticed this a lot, like whenever I have scenarios, giving you kind of a little nugget here. This is something I have in the lab right now testing. So if you want to kind of get ahead of it, before I, talk about it a bit deeper later, if you're really dedicated, then I'm going to give you something else to study here. I haven't really talked about it too much, but it's something else. Like, and I'm about to go into like a talk about how you need to forget precision, but this is like something that you can actually utilize to get a little bit more precise. But it's just kind of like a little thing I want to give you to study. Like whenever price comes up and it takes out like a third candle draw and you still have a candle confirmation deal, those typically don't have much of a move higher after that. So if you have like something like this where it has like a strong close down there, and then you have third candle draw taken out and it's still bearish, after that third candle draw is taken out, you get a new displacement. Those typically don't chop too much. And those are the scenarios that I do see that you can be a little bit more, like you can keep your stops tighter on. You see what I mean? Those are the specific scenarios that I've been studying that I've noticed. But I'm just kind of giving you that little nugget there because I haven't really talked about that too much yet, but it's something that I got in the lab, right? Because I'm always testing different things, looking for better ways to do things, right? But what I was going to say a second ago was, because folks are like, 1-to-1, you can't make money with a 1-to-1. You 100% can. My entire career has been built on 1-to-1. That's why when I see and I hear these folks say that you can't make money with 1-to-1, I know they're full of crap. They're full of crap. Like, oh, you can't make money with a 1-to-1. Oh, so no, come join my course, come join my mentorship, and then see how we do it, right? It's just a fucking sales pitch. Like, these people don't make money trading. All they do is make money with their courses and all their BS, right? Because big risk reward, it sells well. It sells very well online. What I'm doing with 1-to-1 doesn't. That's facts. That's facts. 1-to-1, it doesn't sell well. It doesn't market well. It doesn't look good on, social media. Flaunt the 1-to-1 doesn't work too well, right? But guess what? That's what makes you the money. That's what makes you the money. Everybody who does the 2-to-1, everybody does the 3-to-1. I'm saying you can't make money with it, 2-to-1 or 3-to-1, but 1-to-1, I'm telling you, it's a game changer for most folks. Most sleep on it, but it's a game changer because you bring your focus away from being perfect, having the best entry, which holds back so many traders. Precision. holds back so many traders when they should be focused on where is price going to. Let me say that again. Focus on where is price going to, and that's going to change the game for you. Forget the perfect entry. You don't need the perfect entry to satisfy your ego, to go flaunt on social media for your friends or for strangers online that you don't even know, that don't care about you, that aren't helping you financially. You need to understand where's price going, and that's what it allows you to do. Okay? Because there'll be plenty of cases where it'll just chop around a bit, then it'll go back down into where you want it to. See what I mean? So that's how you would approach it. And I use this setup specifically because what I'm trying to pinpoint with this video is how to target higher quality deals for the folks that, I know if you're trying to do everything like I do, it could be a little bit more overwhelming for a beginner. So I'm trying to narrow it down for you to focus on the better deals, and then you can graduate into branching out a little bit more later on. But this is what I want you to do. I want you to stay with the trend. I want you to flow with the trend, and I want you to do it like that. That's going to be your best bet. And yet again, here's another example with this NZD-USD here is you can see it's still in the down. So we have the downswing. You know, it's bearish structure. Daily's in the downswing. The 4 hours bearish, consistently moving lower. And you see like right here, that's step number one, is we want that strong close right there. You get a really strong close beneath that low right there, where my cursor's now pointing. A lot of conviction, a lot of strength. So then what that does is that brings our focus to that low to get ran out down there now. You see, that's been taken. A lot of conviction brings my focus for that to get ran out right there. This candle opens up at 1 o'clock, which, yeah, that's outside my kill zone, but for the sake of just studying purposes, I'm showing this to you. Because a lot of my deals, you know, throughout the, a lot of my best deals throughout 2024, once, you know, I started doing candle confirmation. Yes, I got plenty of winners that were counter trend too. I got plenty of winners where I didn't have the daily tide. I didn't have the 4 hour tide. I've had plenty of winners with that as well. But I'm telling you, just like those selective best of the best deals, this is what you'll find. Is when you have that trend back and you like this and it's super weak. That's what you'll find. So we have that strong close right there. And then this comes up right there. Do that. It opens up and it presses up. You need to see it press up and leave that low intact. First things first. And you need to see that pivot tested. You need to see what I call the fake move. Okay. So that's what happens. Here's 1 o'clock. Find 1 o'clock. There's one. And what happens is it presses up after one. It gets pressing up. And you test your pivot point right there while having that low still down there intact. It's still there. Remember how weak this thing is. Remember how weak that trend is. You have the tide backing you. Again, having that tide backing you, it's going to put the odds in your favor. Okay. And now you get your pivot point. Now what do you look for? What you look for after that is you look for your 1 minute displacement. Look right there. There's a short-term low where my cursor's pointing. It closes strong beneath that. And it creates this fair value gap. As soon as that happens right there, you can get in. You can get in. You don't gotta. I don't personally need to wait for like a premium or a discount to get in. If I only have my 10 pips, it's good to go. Then I can just mark it in and take it down there. So you get in like right there. That's your target, 1-to-1, just to give it ample wiggle room to do its thing. And you can see what happens is it folds smooth like butter all the way down into that low, and it cleans it out right there, and you lock in gains. So candle confirmation is a very simple strategy, and it's the same signatures. And this is what you're going to look for. That tide back in you, the 4 hour tide back in you as well. The conviction, pivot point tested, 5 minute sweep, 1 minute displacement. It can be that simple, and it can be that, and it's just so effective. Okay. Now, the other way that I've traded throughout 2024, for most of 2024, now, whenever I was trading like this, only trading like this, my months were not nearly as large. I was still doing good for myself. Like I was still averaging, 30 grand a month, 20 grand a month. Like I'd make 30 grand a month, 20 grand a month, 40 grand a month, in that range usually. So I still did well for myself. But now once I introduced the candle confirmation, I mean, you guys see it. 200K a month, just shy of 300K in a month. This month, or not, in December, just over 100K in the month. Like it's it's really made a huge difference. But I still did well with this as well. So I'm gonna kind of talk about like what that was. It's just classic market structure shifts. That's what it is. It's just market structure that I'm trading. So this is obviously bullish right here. USD CAD's bullish. It's been running up here, and I'll still get plenty of short deals. This would be counter trend, and it's the same thing what I was saying with the candle confirmation. Even with market structure, of course, going with the higher time frame trend is going to help you in entire probability. But I do get a lot of market structure shift deals that are counter trend. And how I approach that though is you got to understand where you are. You got to understand whether you're in a premium or you're in a discount marketplace. You got to understand where your key levels of support are. Okay, if you're looking for a short scenario, that is key levels of support. So we have this thing. It presses up. You see, like that has like look at my cursor and follow my cursor. This has like a really big leg up like that. See that really big leg up right there. What is that? That's a dealing range. Low to high. So why did I take that low to that high? Why did I not take like that low, or why not that low? Why this low? Because this low grabbed liquidity. See how that grabbed liquidity right here? So whenever I'm measuring my dealing ranges now, I didn't always do this, but this is what I do now because it's the best way to get the most accurate dealing range, is take the low that grabbed liquidity to the absolute high, and then that gives you a dealing range. And I want you to look down below 50%. Why? Because that's where you enter a discount. And I want you to target, and I want you to identify your next key level of support in a discount. It's the inefficiency. So here's what I'll do whenever I'm looking for like a market structure shift deal and it's fighting the trend like this. I will measure my most recent dealing range, and I'll identify my next key level support in a discount marketplace. Like in this case, I got this inefficiency right there. And I have this thing pressing up, as you can see. And then what happens is, you see it gives like, look right here. You see that? There's a short-term low right there. Look at my cursor. So it closes beneath that right here. And then you got that fair value gap in there. So for a high probability shift to market structure, you need a significant liquidity run. We got it. It's pressing a lot of liquidity up there. We need an opposing draw. That's the inefficiency down there. And you need the fair value gap, and you need the strong close on the displacement. We got it right there. At that point, you can hop in, and then you can look for it to come down into that fair value gap in a discount. That makes that for a good target, like a good low-hanging objective target. Because if I get a short deal on something like that, that's super strong like that, I'm not trying to swing for the fences, which I never do swing for the fences. But you got to be very nimble. You got to be very careful. And that's how I would approach these deals. And again, I use this scenario because I get a lot of market structure shift deals that have this type of criteria. Like it's very similar to something like this. Like if I have a counter trend deal, then I will measure the most recent dealing range, and then I will just hunt within that dealing range my nearest inefficiency or nearest liquidity pool to target for like a low-hanging objective scalp deal. I'll look for my fair value gap. I'll look for my strong close like I got right here. That'll confirm it, and then I can hop in and just target the nearest inefficiency. For a lot of my market structure shift deals, that's how I approach it. That's what I do. That's what I do right there. Of course, if you have the trend backing you, you could be a little bit more aggressive with it, and you could look for bigger targets, and it's higher probability too when you trade with the trend. But that's how I will approach it. And so market structure shift, I've been doing that ever since the beginning of 2024. Last few months, implemented candle confirmation, and just the growth. I mean, the profits have just been piling up. They've just been completely piling up. Now, here's the thing. And here's something that, your gurus won't admit on YouTube. You're going to have losing streaks. You're going to have drawdowns. I've had losing streaks this year. I've had drawdowns, right? It goes in periods. Like you'll have hot streaks where it's really, really hot. And then you'll have slow periods where it's like nothing is sticking. It's like nothing is sticking. Like I said, just recently, I've been in a little bit of a slow period. It's not really much of even a slow period. It's literally just like a week or so of where, it's been kind of hit and miss price action. That's really not even much of a losing streak. Or it's not really much of a drawdown. But you're going to have that. And sometimes it'll be for like a month. A month. Yep. It'll be for like a month, and where you won't really have the greatest price action. And you can't let that throw you off. It'll throw off most people. That's where most people, when it's hot, right? When any strategy's hot, everybody's so enthusiastic. They're like, oh my gosh, they're just so excited. They're so elated. And a lot of those people, all it takes is just one little losing streak, one little drawdown, and then they're on tilt. They're on tilt, and then they're a wreck. Then they're back searching for a new holy grail. They're back searching for a new strategy, because that's where you find out. And this is why I absolutely cannot stand when I hear folks say psychology doesn't matter. So it's just an edge. It's just an edge. Those people don't know what they're doing, bro. Like, that's people that do not know what they are doing. They have something to sell you, because all strategies, they have losing streaks and drawdown. If that's a reality of this business, which I think most people, unless you're a furu, can agree on, how do you get to deal with that? How do you deal with that? Right? When you're hit with several losses in a row, and then that ego starts to pop in, the ego wanting to be correct, or maybe you're just trading a little bit big too, and then you just get emotional. But that ego's the big thing. The ego starts to get in. You're incorrect. Your price is showing you over and over again, you're wrong, you're wrong, you're wrong. And that's going to eat away at you. And you're going to find out real quick, oh, psychology does matter. You're going to find out real quick it matters. It doesn't even matter if you have an edge. If you have an edge, you can give a lot of folks an edge on a platter, which I've done. And a lot will still fumble it. They'll still fumble it whenever they're faced with those periods. But here's the thing, which I've proved this real time, is I've shown you guys losing streaks. I've traded through these losing streaks. You know what I do though? I keep executing. You know what inevitably happens? What rolls back around pretty soon after? A building phase. You have survival phases in trading, and you have building phases in trading. You don't stay in the building phase 24/7. That ain't going to happen. All right. You build, you survive, and the building times just need to be a lot bigger than your survival times, right? Which they will be. When candle confirmation's in a building time, or a building phase, I like to call it, you're going to build. I'm telling you, if you take full advantage, you're going to build, you're going to rack up capital pretty damn quickly. But whenever it's slow, it's just a matter of managing your risk, continuing to execute your plan, and staying level-headed. And if you can do that, then it rolls back around, and then you can build again. Most don't survive the survival phase. All it takes most is just literally a week. Even a few days of just slow price action will throw most people off. Most people are just that weak-minded. They're that weak-minded, they're not going to survive. But those are some pointers there. A lot of my best trades, best deals, they have that criteria that I showed you in this video. So I want you to take that, go into your charts, study it. And folks, we're going to kill 2026. We're going to dominate. I mean, not 2026. We're going to dominate. Folks, we're going to dominate 2025. We're going to absolutely dominate it, right? Only following the plan, doing what we should do day in, day out. Let's get it. I'll see you on the next video.